Thank you everybody for joining us today. We have a great event for you today about everything you always want to know about VCs. My name is Shane. I run the events over at 10 Capital. We have Jonathan Hung from Grudge Ventures with us today, and he's going to be giving his presentation, and then we'll have a couple of pitches after for you. With that, I want to hand it over to Jonathan and let you get things kicked off.
Great. Thanks so much, Shane. Hi, everyone. It's always different when you're just talking, not getting to see everybody, but I'm looking forward to just answering any questions you guys have after this little presentation that I have. So I'll share my screen real quick and give you a little background about myself. So just starting off, like Grudge Ventures, I think, every great entrepreneur, business person, it really has something to prove. This isn't getting into venture capital, doing a startup isn't like working a 9-to-5 job. And I always remember my dad teaching me that, so my background basically is that, I got a lot of schooling in my 20s, went to USC for undergrad, then went to London School of Economics right after that. Was fortunate enough to go to MIT and Wharton to get my 2 other masters there in supply chain and engineering at MIT, and then my MBA at Wharton. My background is interesting because like I've done a little bit of everything. I've worked at like Fortune 500 companies, I've run my own business, and I've done a lot of investing. So really when I started off my career, it was a financial advisor, during the Great Recession. And it was such an interesting time in my life because, and I'll tell you about the name right after, Grudge Ventures. For me, it was a time where it was so interesting to see the opposite sides, of being an operator, at the same time being in the service industry. Like being a financial advisor, I was there when the Great Recession, right before the Great Recession started. It was so interesting to see. Like I thought, like, wow, I'm going to go to Morgan Stanley. I'm going to learn. They're going to teach me how to invest. And I was like, no, they didn't. It was more of a sales job than anything else. It was about just getting assets under management. Finding ways to make commissions. It had nothing to do with really being a great investor. And it was so interesting to me, like, treating something. Because to me, I didn't like the fact it was just like, hey, you're just like trying to get as much money as possible to make as much money as you can. The joke is like, oh, OPM, up other people's money. And I just never liked that because I always like to treat the money as something where it's not just money. Like I had a great boss once who told me this, where, when your client looks at that money, it's not about like a dollar sign or a figure to them. It's about what that represents. Later on, you're going to hear from my partner, Mike Jacobs, who, we have a startup that we're working on together as well. At the same time, I'm doing a venture capital. I'm like, listen, the money that he sees in the account, like he has a baby girl named Jules, hey, that could be her college fund, right? That's what people see their money as. It could be for their retirement. It could be for, that second home that they've always wanted, or, getting all their kids through college, or like donating to some great cause. Like that's what money represents to certain people. And that's what I thought was so important. Like, I like to see myself as being the CFO to your life, because you're the CEO of your life. And that's how I ran being a financial advisor back in the day. And I love doing it. I got to learn how to really like not just make money, but understand how important it is to earn the money, because it's not easy. It's easy to spend. Let me tell you, right now, I'm in Las Vegas right now for a convention. And, you go outside of that casino, it's like, wow, you could go quick. And so really, like, it takes a lot of hard work and effort. I always joke around, like, you hear about like real con men and con people. And it's just like, I heard the funniest thing once from Jordan Belfort. It was like, Wolf of Wall Street was talking about this guy, Joe Low, the billion-dollar whale. And in his excerpt of the book, it's like, you know what? I knew something was fishy because the way Joe Low was spending the money, he didn't earn it. Because if anybody's made like hundreds of thousands of dollars or millions of dollars, they know how hard it is to make that money. Like you can't just spend that money like, oh, let me spend $20,000 at a nightclub or buy like $50,000 worth of shoes or artwork or whatever. Like, it takes a lot of hard work and effort. And that's what I think is so important when it comes to venture capital too. It's not the end results. My background, I got to this point, I started in 2012 running after working at Morgan Stanley, UBS, and Cummins. I got to run my family's business, contract manufacturing called Barrage, United Overseas Textile Corporation. And that was eye-opening. It wasn't just like I had one title, one role. I had to do everything. It could be accounting one day, it could be legal one day, it could be like, calling offices in Hong Kong, Shanghai, Taiwan, Taipei. It's not a 9 to 5 job. It's something where you're an operator, you're an entrepreneur 24/7. And like, I have a cousin who worked at our firm, and like he was a little older than me. He could have taken over this business, but he never wanted it. He was more comfortable being the accountant, really, and he was a good CFO. And that's great, to me, but like you have to get out there. You have to be willing to take chances. And, I think it was another really close friend of mine said to me, everyone takes no. Like if you just took no for a response, we would never get anything done. And that's the thing. Doing sales is something getting to yes, and helping entrepreneurs get to yes. And so why I started Grudge Ventures was really because, it goes to this slide here where it's like, I want to help entrepreneurs make their grudges come true, because it's something there where you have a chip on your shoulder. There's something like, I could call it petty ventures or spite ventures or something funny like that. But, it's something where you have to have it in you to do this, because it's not easy. It is not easy. Like, I mean, Mike will tell you, we deal with things all the time where, I'm coming in from it, not just as an entrepreneur, but also as an investor. And I know the tough decisions that we have to make. Can we add more money, to a company? Because I see myself as really a high school counselor, from 0 to 1. Was asked the question, like, it is so hard to get to 0 to 1. That I think is the hardest part. Like, I think being a growth investor is so much easier. It's like studying, like, hey, should I buy Facebook now? Or Meta? Do I think it's like better now to get that opportunity? Can Mark Zuckerberg turn around? I mean, like I actually met Blake Masters and Peter Thiel earlier this year. And yeah, that book, it was tremendous, their thinking, whatever you think about their political views is different, but like the way they look at entrepreneurship is so interesting, because it is like yes or no. And I would say Mike's taught me a lot of things that are important too, running a business. It's like, he told me once, like, hey, you got to spend at least $1 million to know if you even have anything for a B2B SaaS business. And I absolutely agree with that. Sometimes entrepreneurs, they can give you a business plan, an idea, pitch you for the pre-seed round, but you don't know what you're going to get until you actually go and execute, build a team, find people, who believe in your vision. Because in the beginning, you're going to get, out of 1,000 meetings, you're probably going to get 990 no's, and maybe you're going to get those 5 to 10 people or firms who are really going to believe in you, these angel investors that are going to give you that opportunity and chance. And that's how I got into the business. I took over my family business of contract manufacturing, making clothing for Burlington, Costco, Amazon, from my father, who built the business. Amazing job that he did, came to America with like, from Taiwan with maybe $500 to his name. His mother died when he was 3. His dad died when he was 16. And, he met my mom in Taipei, and they moved, and it's really the American dream. Because if he had stayed in Taipei or worked in China, it never would have been as successful as he was. And it's all about grit. Like, that's why I think you have to hold a grudge. Like, the best entrepreneur I know is my father. And unfortunately, he passed away 7 years ago, but I got to work with him for 3 years at Barrage, and that taught me a lot. It's really looking at the blind side, he used to call it. There's things where you think you have a path, and it's not always straight. It's always left, right, up, down. You have no idea where you're going to be going. And that's what I think I've brought to the table as an investor and venture capitalist, is that I've gone through it. Now, doing my other startups, working as an entrepreneur and operator, and at the same time being an investor, because I've seen things differently from all angles. Like, you could have the most amazing product idea, you get all this funding, and you make one mistake, or there's macro events that happen, and unfortunately you have to shut down. But I think the best investors and even the best entrepreneurs are the ones who have that grudge, who have something in them that make them want to keep fighting and continuing. I mean, I just earlier today spoke to a guy, I can't say the name yet of the company, but really, he really like put it down on the line. Like, I gave him an angel check of 25,000. I wouldn't have put it into Grudge Ventures, because it's different being an angel investor versus a venture capitalist. Because, VC, I'm going to have LPs, right? I'm going to have to be beholden to them because it's their money and I have to do what's best for them to make the absolute return. But deep down, I'm an angel investor and I like to take chances on people, more so than the ideas. And this guy like resonated with me in his pitch deck. He even laid it out. It's like, listen, I'm single. I have no kids. I put my entire life savings into this company. And it's like a peer-to-peer betting company. And it was so interesting. Like, I don't want to say like what sold me over top with that he said he would run over Mother Teresa to get the business going. Like, that was fun. But he did say that. I thought that was cute. But it was just that you could see that hunger in him, and he's not going to give up. I think a lot of people who run into little issues, a lot of people just like are willing to take no, right? And it's a person you want to take yes, who'll do whatever it takes to get to that yes in sales or in anything that will get the job done. So what I'd like to talk about next is really just let's see, I'm just going to jump around because this is my pitch deck. Right now, like I'm starting Grudge Ventures as a new venture capital VC fund that I'm about to raise about 20 to 25 million for. My past experience is that I've run let's see, Unicorn Venture Partners with two other friends of mine, Dave Lynn and Philip Seraphin. It was not a huge fund. It was about $5.5 million that we raised in 2018. It was only our money. We didn't take LP money. We wanted to prove it out to ourselves. I'm sorry, sometimes I'm looking at the chat and the questions too, but I'll get to all of them. It was something where we wanted to prove ourselves to see if we could do it. And we did a pretty good job. I mean, like to jump around, like if you looked at our track record for that, it's here. Since 2018 vintage, out of like about 22 different companies that we invested in, to date, of course, the markets are changing right now. Valuations will probably be reset, but it was almost a 6x on our multiple on invested capital. We had pretty good IRR. We have organic unicorns that we got into, like Cerebral, that we got in at $12 million, Coinbase, we got into Series D. I always joke, we sold because it's not just about like holding. Sometimes you have to make sure when to sell as well. But, even if we didn't sell, our cost basis Coinbase was $32 a share. So right now, Coinbase has not gone under, $32. So we're still up on that investment. Sologen, an amazing company. On the last week, on the 28th, they announced that they raised about 200 million at 2.1 billion valuation. So we got in March 2020 at a 260 million valuation with Founders Fund and other great investors then. So this is it. This was like my proof that I could do this, because previously, this was my track record too. This was me doing angel investments, and I'm really proud of these first three because it's like, these were, I obviously put in a little bit more money afterwards, but these were all 25K investments, that I started off with, with nothing. These were all pre-seed raising at 3.5 million valuation companies where, look, Bearfag Robotics got bought by John Deere for 250 million in under 4 years. Boulevard got in at 3.5 million pre-seed round, friends and family round. They just raised 70 million at a 595 million valuation. Miso Robotics, I wrote the first check. And it was because it said, hey, we want to build a robot that flips hamburgers. That was it. That was the premise, and we're just like 4 PhD students from Caltech in the robotics lab. And so it was very impressive. And so, okay, let's take a chance. That's where I love to do, as an angel investor, because it was my training as a financial advisor that made me want to do this, because this is what I found. Like, I'm turning 40 in December, and this is where I love to be and what I love to do. How did I come across these companies? It's really my network. If you looked at this, I think a lot of VC funds and talk about like, oh yeah, well, we invest with like Andreessen or Sequoia or whatever. And it's like, I do too. But the difference is that I'm not just a general partner, I'm an LP too. I am an LP in 36 different funds personally, and not including what I've done working as a partner at Trousdale Ventures with my close friend, Philip Seraphin. These are people that I know. I can get them on the phone and talk to and find deal flow and access, because you're only as good as who you work with. I think it's insane to go this alone doing venture capital. You have to grow out an amazing network. Like, if you just point at any company, I could tell you like my relationship with them, the deals that we've looked at. if I had to pick one out of the blue right now, like let's say Refractor Capital. That's my friend David Lee, who started with Zal Almoria. Now Zal's a solo GP. David Lee started SV Angel with Ron Conway, did an amazing job there, but it was through my family connection. My cousin actually hired him at Google. This is way before he was a venture capitalist. David, went to law school, and we've been close. And he got me into Coinbase, Solid, and all these amazing companies. And it was just through years of investing with people. I always think it's funny because it's like, I don't want to split up the pie. I'm willing to make the pie or pizza bigger for everybody to enjoy and get full off of. That's what's really important to me as an investor and as an operator. Like, I don't want to deal with people who are, quite frankly, assholes. Like, you get a lot of that. You have a lot of people who think they know more or do, or better at diligence or whatever. And no, sometimes it's like you're at the right place, the right time. I mean, my joke is that, like, what about your anti portfolio, right? What are the deals that you turned down? Like, I would say my biggest like anti portfolio miss was because I didn't have enough of a network when I started out as an angel investor in 2012. It was a company to me that was said, hey, we pretend to buy and sell stock. And it was a friend of mine from Goldman Sachs, who was a managing partner there, director, and said like, oh, well, these guys, this is their second time startup. And I'm like, well, it's a gaming company where you pretend to buy and sell stock. Like, I worked at Morgan Stanley UBS. Like, I wouldn't even play that game. Like, like I should be the audience. And then and I was thinking like, why do you call it Robinhood? Like, it makes no sense. Like, Robinhood. And I turned down Robinhood at $20 million valuation. If I put my 25K angel check back then, hey, probably worth multiples of $1 million, even if it came down from where at the high. But to me, it was an important lesson, of how I should look at diligence. And it wasn't about necessarily the idea, because obviously they pivoted. It's not, there are gaming things in the company still. When you buy stock, you get some confetti blown up. But at the same time, it was just like, it should have been about who the founders were. And I should have like downloaded the app, kept talking to them, keep tabs. Because one of my biggest thing that I do is that I don't ever say no. I give a reason for why I'm passing on this current round, and then we can come back to it, because I get it. Like, I see both sides of the table. Like, Mike and I, we've been told so many times no, since we started the company, Kitchen Data Systems, in August of 2021. But you know what? You find the right people who believe in the journey, and we'll get there. And eventually, the people who said no before, we're not going to say like, hey, we're not going to talk to them again. Like, listen, it's only so much capital that you can get in the beginning. You need multiple different types of teams and people brought along the way. Like, going from 0 to 1, like, listen, going from 0 to 100,000 revenue, that takes a certain type of team. But then, as Mike and I've talked about numerous times, like, listen, once we raise our seed round, we're going to have new people on the team. Maybe we're not even going to do the day-to-day. We're going to find people even better than us to run things that'll make it even better, because that's what's so important when running, whether it's a VC fund or really a startup. It's about the people you surround yourself with. And that's what I think is important to me. Really, like, my advisory network, right? Like, it's not just people that I went to business school with or went to MIT with, or, these are really close friends of mine who have this amazing experience that I could call on to talk to now when I'm looking at an investment or deal. And then, like, okay, you could look at people who are way ahead of you, but you got to give back. Like, I do all these things at USC, where I went as an alumni, at UCLA, even though there are bitter rivals. Like, I go and talk, LSE, MIT, or the venture lab at Wharton. Like, I go and hear amazing ideas. Maybe I'm not going to invest in every single company, obviously, but you got to like put your ear to the ground. The moment you don't want to be networking, the moment you want to do something like this and talk to people and get people's opinions or hear their different points of view, then retire or do something else, because these deals don't come to you. You have to be fighting every day to find the best possible outcomes. And that's what you should do. Like, diligence is part of the business that you do as a venture capitalist, but it's also about relationship management, whether it's with your GPs, LPs, or really your entrepreneurs. And furthermore, like, the team that I have, great people, I've worked with these people for many years. I've talked to them. We've invested together, whether it's Sohaila, where we're closely with, and Saket. And, that's Philip, picture of him. What kind of company will I become an advisor to? It just depends. really, it just depends. Like if we're leading a big check, like tomorrow I have a board meeting for a ready to drink beverage company called Skin Tea. And it really depends what he or she needs as an entrepreneur. Like, actually, she was texting me today, giving me insight of what she wants to talk about tomorrow. Like, how should I present this to the rest of the board members? Because the rest of the board members include like the president of Jordan Brand and the former CFO of Palm Wonderful. And she's just giving me updates, and what we need and talk to. So that's what's important because everyone's different. Like sometimes it's not about having the biggest check and having the biggest voice. It's about like what I can provide. Like, I have a good background in supply chain, so I could talk about like what needs to be done, like what kind of manufacturing you need to look at, like what kind of co-packing you need to work with, what kind of terms you have to work with. Because like I used to sell to Costco. I know what their payment terms are. Like getting that business from Costco or Walmart sounds amazing. You get so much revenue as a CPG company. The problem is you better be careful with your cash flow. You better know how you're spending your money wisely, because that could kill you in the long run. Because that big business, you think you're getting a $10 million order, it might hurt you really bad because now you didn't raise enough money and you have other people and suppliers to pay. What are you going to do? So it's really important. It's all the strategy. Like, I think sometimes it's about what that entrepreneur needs. Like I've talked to people like who want to talk to me weekly, daily, monthly, or some people won't even talk to me. Like the funniest thing I tell people is like, one of those checks I wrote for 25K that's worth over $1 million now. It's like, I haven't talked to the guy since I wrote the check. Like you could see like the messages. I keep sending him like congratulatory messages when he raises his next round, and he hasn't responded. And he responded actually this summer, when he raised his $695 million valuation. And it was the funniest thing. I was like, hey, I said to him, like, listen, I'm a superstitious kind of guy. Like, I got to keep congratulating you, or else you won't keep raising more money. And he could have come to me to get more money or do my pro rata, but he didn't. And that's okay. Whatever they needed at that time is what's important. So let's see, how much time do I have left? Probably another 5 minutes. What else could I talk to you about? Well, I'll just show you who it is. It's just funny enough. It's like, it's actually here, Matt. I love Matt. It's just like, I remember we were like talking every day when you initially pitched to me, and and I've been talking to him for almost 2.5 years. But hey, it's most likely to become a unicorn, so I give him credit, for what he's done with Sean there. I met them at a breakfast, get together at Upfront back in the day, and I'm proud of what those guys have done, because I was there really early. Right now, so I'm working on this new fund, Grudge Ventures, and I don't want to create a huge, massive fund like 50, 100 plus million. I think my sweet spot is 20 to 25 million, because instead of writing 25K checks, look, I can write my 250K or 500,000 with really close LPs that I like to work with, because that's what really matters to me. Really, it's not about me. The GP commitment is more important to me. Like I'm putting my own money in line with everybody else. I've been very fortunate because of my family background and working at my doing my startups and also working in my family business, that I've accumulated some wealth and been able to help a lot of people's journeys along the way. So I still want to do that. I'm not looking to retire or like get out of the game. I think I'm even better than I was 10 years ago. So the next time I see that Robin Hood, I'm going to write even a bigger check. That's what matters to me, because I really think you have to have a strategy too when you do VC investing versus angel investing, right? And so I have a strategy in place. I know what I'm going to work on. And like I talk about like some of the deals I'm working on now. It's actually fun. Like I've already warehoused some really great deals, 8 deals so far. There at least 3 or 4 of them are already unicorn valuations. They're going to do really well. After my presentation, you're going to hear from one of them. Mike Jacobs from Kitchen Data Systems. We've done an amazing job getting that business from I think we're at 1 now. I'm pretty sure we're at 1. It'll be really interesting. In a downturn market, what sort of traction do you, or at least look for a pitch from early stage startup? I really think what's important, Henry, is really like, how can you grow? Because whether it's like when I look at a company, obviously, hey, you're looking at the team, right? And looking to see like next up is like, you have some sort of IP or idea that's different and unique. But then what's really important after that is about the revenue traction and your growth of customers. Like maybe you don't have enough revenue, but you're growing tremendously. right? You're a social media platform, for example. Like, hey, I have a company, he's amazing. He's always top 10 in the Apple store. He's just able to get Gen Z's attention and really find a way to get them to download his app and use it. And eventually, like LinkedIn or Facebook, he's going to convert those users into revenue. Minimum TAM, I mean, it just depends, right? I mean, ultimate value, I mean, it just depends. I think right now, if you're doing a pre-seed round, you should be, somewhere between 3 to 10 million, depending on who you are in your team. From a seed round valuation perspective, I think, anywhere from 10 to 20 makes sense. I tell people, like, I'm good at helping companies for under 30 million valuation. That's not it could be an arbitrary number, but I think, it could go up to 50, right? But I think that's where it makes most sense for where I can come in and help coach you and get you to college, right? That's what I'm telling people I'm helping them do and work on. Anything else? I guess one more thing I'd see as a venture capitalist is, like, you have to have vision. And this is my vision of how I'm going to construct my portfolio. Right now I have more opportunistic things because it makes more sense, because we're in a downturn and we need to see companies that are going to really, exit and have that velocity and have the revenue. Right. But, pre-seed, I've done something with Mike and I've built it. I've seen it, and it's made me even a better investor by running a business and seeing the entrepreneurship side. But I'm very lucky. I've done both, and it's something that's really interesting to me. So now, yeah, Shane, I'd love to take questions from everybody.
Yeah, thank you for your presentation, Jonathan. It seems like you were getting a lot of the questions out of the chat box. So if anybody else does have any questions, though, we'd love to have Jonathan answer them. Just go ahead and put them in the chat there. We'll give it a couple of seconds, but yeah, sorry, I have stuff on my screen here. Yeah, if anybody has any questions, go for it. Jonathan, if there's anything else you want to share in the meantime. How do you help founders find product market fit?
It always just depends, Christian. I'm sure I'd love to hear your story. I'm going to stay here and listen to your pitch. It just depends on what sector you're in, what industry you're in, right? I mean, product market fit to me means that you can get some sort of recurring revenue, and obviously that's B2B, that's SaaS, that's one way of looking at it. But, like, I also do a lot of consumer investing, right? And it's about, like, well, am I going to be always outspending all the time? Like, I have companies that I look at for Trousdale Ventures where we've invested over $500 million in the last 3 years. And, like, we sit on the boards and we look at all the things that's happening. And it's just like, wow. Like, I have one company, I'm not going to name names because, that's confidential, but, they made probably 35, no, they spent 35 million to get 21 million in sales. Like, that's crazy, right? When you think about it, like, wow, how can they raise that much money nowadays? Like, they're probably gonna have to cut that burn down. But listen, they got to a point of 21 million in sales for their beverage company. And it's great. Like, I see other companies too, like Liquid Death, to justify that valuation, you better keep growing nonstop. Let's see, next question.
I don't see any more in the chat right now, but yeah, if anybody has any other questions, feel free to drop them in there. If not, we can always take your questions via email. We will be following up with everybody who attended, so we can get your questions that way as well answered. But if not, Jonathan, again, I'd like to thank you for your presentation. It was wonderful. And I know we have Mike Jacobs coming up here in a second, who partnered up with, so
Yeah,
great. But if there's anything else you'd like to add, now would be a great time.
sure. I think in anything you do in life, you have to find the right partners. I was lucky to find someone like Mike as well to work with, because, that's what I remember. Like, I interviewed with every company you could think of, whether it was Goldman Sachs, Google, Facebook at the time, McKinsey, all these things, that I had the right pedigree, right? I went to the right schools, I was not smart. I was, like, willing to work hard. But I think the most important thing, if I had to go back to some of those interviews, was like, you're going to spend, like, more time with the people you work with during the week than your actual family. And you really have to have a good working relationship, because, like, listen, like, I'll tell you the truth. Why am I starting Grudge Ventures? There are people that I've worked with in the past I don't want to work with anymore. and I have a grudge to show that I could do this with or without them, and it's not anything malicious or bad. It's just like, I still have that in me. And if I didn't have that in me, don't give me a dollar because, I don't deserve it.
Awesome. Well, thank you so much again for your presentation. Like I said, if we have any other questions, I'll have you answer them in the email. So if anybody does have questions, keep asking them in the chat and we'll collect them afterwards. And with that, I want to close out the presentation portion and bring up Mike Jacobs from Kitch Data to give his pitch. Please stick around, audience members. Any people in the audience who have questions, investors, fellow entrepreneurs, if you have questions we have 2 pitches coming up here, just put them in the chat box as well and we'll get to them if we can. Looks like we still have plenty of time here, so stick around for that. And with that, I'll have Mike, you can go ahead and share your deck there and get us started.
Hey, everybody. Good morning, good afternoon. Thanks for your presentation, John. Really loved hearing your perspective on that part of what you're doing. I know we don't really talk about that a lot. So, I'm Mike, 3rd-time founder. I definitely have a grudge or two, mainly just around, while I've been successful, I've always thought back on how I would have done things differently with my other companies, and with a little bit of experience. So basically, I'm the CEO and founder of KDS, and I'm doing this with John and Mark, our CTO. Mark and I worked together at one of my previous startups, which serves probably somewhere around 6,000 restaurants right now. Before that, I founded a company in the sports and entertainment space that works in a couple hundred arenas. And the goal is always to get progressively bigger with what you're doing. And in this case, after about 10 plus years working in the food and beverage industry, realized through a first principle analysis that most people really haven't figured out why restaurants fail. If you go to a restaurant conference, you hear a lot of different opinions about that. But ultimately, through my experience, most restaurants that are small businesses really fail because their costs of goods sold are too high, and they're spending too much time and effort in sourcing the best deals that they can get from sometimes 30 to 40 different vendors. And in the past year, there's been a lot of inflation. The restaurant cost of goods sold have gone up nearly 9%. There's also issues with labor shortages and then increased competition coming into their market from different ghost kitchens, plus tech companies like DoorDash and Uber Eats. But ultimately, right now, the biggest problem restaurants are actually facing is inflation, rising costs of goods sold, and consumers' inability to spend $30 to $40 on a hamburger. So solution-wise, we had to figure out a way to help restaurants save on their cost of goods sold. And in order to do that, we had to do a couple things that I'll talk about in this presentation. But while we're saving restaurants on COGS, we're also increasing their sales with different marketing solutions for their locations, plus adding high growth revenue streams via virtual brands. So a virtual brand, if you don't understand the restaurant space, it's really just a pop-up that you could add onto DoorDash, Uber Eats, etc. And right now, about 45,000 restaurants in the US and Canada are actually operating a virtual brand. And those are about 5% of restaurants on DoorDash, and they're taking up 15 to 20% of the screen space in the apps, right? So if you're ordering something on DoorDash and it says it's a local restaurant, it's nearby, it's probably just a restaurant remarketing like their pizza or something like that with a new brand name. So the first thing that we built was a marketplace platform for restaurants that connects various brands with third-party delivery, which is Uber Eats and DoorDash right now. And ultimately, we help the restaurants, so we help the brands create a food product that restaurants can copy. And then we then train the restaurants on how to perform it via some technology. And then Uber Eats and DoorDash are operational, making sure that the sales happen. We collect the revenue and parse the funds out every 2 to 4 weeks, depending on the party. And why did we do this? So there's a bunch of companies that have launched virtual brands. I actually don't believe that virtual brands help restaurants directly. But why did we do this? So in order to save restaurants on their cost of goods sold, we needed to create a large restaurant chain. And when we created a large restaurant chain, which stands at about 140 locations right now, it'll be over 200 in a month. We partnered with Cisco, which is the world's largest food distributor. They serve 700,000 businesses across the world. And we basically launched as an enterprise restaurant on their platform with the same cost basis as a national chain like a Cheesecake Factory that everybody's heard of. And the results for our restaurants are great. And the team from Cisco is actually excited to work with us and to offer this to the small and medium restaurants. We're saving, it looks like we're going to be saving most of the restaurants about 30 to 35% off of everything that they're purchasing. And instead of having to have 30 plus vendors in some cases for more complicated menus, it's going to be 1 to 2. Really exciting for them. We also have arranged better payment terms for them. Most restaurants get 5 to 7 drops per week. With the Cisco, they could probably do 2, and a drop is really just a delivery. And then Cisco will give them 7 to 14-day terms on everything that they're paying, so that the restaurants don't have to buy food every day and then with cash, and then buy food the next day with some of the profits. It's really a life-changing and business-changing experience for any of our restaurant partners. So, and in addition, for the brands, we've created a loyalty application. Those are some of the characters, wrestlers from one of our brands. Ultimately, the loyalty program lets any of the celebrity brands connect with their fans in an interesting way around the food. This is launching next month, and it's free customer acquisition for us, but the brand gets to connect with their fans and offer them, in this case, it's NFTs, in other cases, it's merchandise that can be delivered to people's homes. And then this is a big market opportunity. There's nearly 1 million restaurants on third-party delivery. We found 45,000 of them that are operating virtual brands. And since I first identified the virtual brand trend and built software for it for my last company in 2018, we've seen this number go from a couple hundred to tens of thousands, soon to be pretty much most restaurants within a couple years. So we make money in a really interesting way. So we charge a SaaS fee from the brands. So $250 per month per location for a brand to operate, which is a great deal for them. If they were going to launch in a cloud kitchen or something like that, each location, which is Travis Kalanick's new company, for those not familiar, it would cost them $150,000 to $200,000 to successfully launch each location. Instead, they pay us $250. And in addition to that, we split the loyalty program revenue that we're launching next month with them. And then on the other end, we don't charge the restaurants anything, but the restaurants using our Kitchen Savers program, if you do the math, they're paying us about 20% of their savings back to KDS. And that is a big market and big revenue opportunities. You see there's one restaurant, local restaurant chain in LA. We're going to make about $10,000 a month working with them on Kitchen Savers, and they'll be saving about $40,000 a month. Really, really cool model. And if we're trying to get them the same results from top line, given restaurant companies' margins, they would probably need to add about $400,000 in monthly top line to equate that. So we're completing a $2 million pre-seed round. We have a couple $100,000 left. We have some great investors, and we're next year, Q1, end of Q1, we're going to be going out to the Valley with San Francisco with a seed round with one of the funds there who's has some really great experience and connections in San Francisco. So this map's a little bit old, but it's showing basically our network a couple months ago. If I showed a new map, it would have about twice as many dots. We're growing very quickly. But that's about it for my presentation. Any questions? Would love to hear some feedback.
Yeah, thank you, Michael, for your presentation. It looks like you just had one question in the chat from Andrew about what is new here. So maybe anything proprietary or something that differentiates you from competition, anything like that?
Business model wise, it's new. So ultimately, the other people in the space are really staking their claim on these virtual brands, which don't actually help the restaurants. It does help the brand itself, but at some point, the restaurants are going to grow tired of working with companies that don't really help them, right? Even if it's new, exciting, and they're learning. Nobody has launched this type of cost saving program the way that we have with restaurants. They tend to launch it and keep the savings for their own restaurants, right? So this would be like if Cheesecake Factory decided to help out all of their competitors and give them better pricing, which isn't likely to happen, and it really shouldn't happen in the market. And on the other end, our affinity program is, I thought it was a one-of-a-kind product, but as we're getting ready to launch it, Starbucks broke the news that they launched something very, very similar. So in a market, there's really it's hard to find anything that's completely new that no one else is doing. I see that as a huge red flag, right? But a lot of this is up to execution and getting from 0 to 1. We've gone from 0 to 200 by the end of the month, which I think is very exciting. And we're at a pace where we can really scale as quickly as we have funding for more salespeople. So ultimately, 5 years down the road, we'll probably be one of the 5 largest restaurants in the United States if we keep growing like this.
Awesome. Yeah, and we'll save the rest of your questions, Andrew, for afterward, just so we have time for our other presenter. But thank you so much, Mike, and we'll follow up with you afterward. I'll bring Christian up now.
Thank you, Shane.
RAKONTO, of course. And just before you get started, Christian, I want to remind everybody in the audience and anybody who might be watching our recorded version of our event today to just follow up with me via email afterward if you have any questions or any interest in any of the companies you've heard from. And with that, Christian, you can go ahead and get your slides up and get us going.
All right, thank you very much, Shane. I'll go ahead and share my screen. And before I do that, I just want to say, Jonathan, thank you very much for taking time to share your experience and knowledge with us entrepreneurs. I found that very, very insightful. So I appreciate it very much.
Very welcome.
Great. And Christian, we'll have you we have about 15 minutes left here. So we'll have you just take up the rest of that and close it out for today. So whenever you're ready.
All right, so I'm ready. Thank you very much. My name is Christian, and I am the founder and CEO of RAKONTO. RAKONTO started its life as a storytelling platform, B2C, but my background is really in technology and knowledge and learning. So I've been in that space almost 30 years. I know that's aging me a bit here. The last 2+ decades have been spent in sport and primarily in the Olympic movement. And for the past 7 years, I've served as the International Olympic Committee's knowledge management advisor. And I have been joined on this great journey by a good friend and very, very talented technologist, Cliff Harley, based out of Brazil. Our developers are based there, who's done some very, very large scale application development. And John Zazzaro, who is our head of marketing, who is very, very accustomed to working with startups like us, who are very, very early in our journey. The challenge that I present today stems from my work that I've been doing with the International Committee, which is institutional knowledge loss. And I'll talk about the particulars of the work that I've been doing with that committee in a moment. But you know, in their case, what the IOC is interested in doing is making sure that knowledge is captured and shared from current Olympic hosts to future host cities. But more broadly, in today's world, we have a significant challenge in this area. Number one, you know, according to our friends at ADECO, 70 million baby boomers are going to be retiring between now and 2030. So there's a long-term issue with the experienced workforce that are aging out. But it's not just a long-term thing, it's an acute thing. We've all felt it with Great Resignation and so on and so forth. McKinsey, in July this year, released a study where they indicated that 40% of workers said they were likely to leave their jobs within the next 3 to 6 months. And about 50% of those indicated that they were highly likely to almost certainly they were going to change jobs. And the big challenge for organizations is that a lot of the knowledge that these employees have still exists in their heads. It's unique to them. You know, we may refer to it as tacit knowledge, you know, for example. But you know, this is a big challenge, and I see some chat bubbles popping up here, and I got to figure out how to get this chat up. I'll move it over here. Oh, okay, I think that's some other stuff. So I don't know if those questions are for me or not, but we'll answer those always. So tacit knowledge or implicit knowledge, knowledge that exists in people's heads, it's a big challenge to get that out. And that's what I've been working on with the International Olympic Committee for 7 years, is figuring out how do I get this tacit knowledge and turn that into explicit knowledge that can be shared with other people. And what we found is that the easiest way to do that is through video and just recording people on video, doing, you know, very contextual interviews. The challenge with all of that is that the content is largely unstructured, and it's all audio and video files. It's not text that can be easily managed. And right now the IOC has a fairly manual process to do that. But what we've shown with our solution with RAKONTO is that we can speed this up quite dramatically. We can make the process of capturing and curating and publishing and analyzing this knowledge a lot faster and do it a lot less expensively than other traditional methods. And this really was the impetus behind creating RAKONTO, which is now in production. If we take this kind of knowledge circle and we break it up into its component parts, each of these parts, from asking questions to recording responses to transcription to the curation of this content, the publishing of it, and then searching or analyzing that, are now covered in our suite. We've got a range of things that we'll be introducing either later this year or next year that are going to be really, really interesting to people. We're new, so we're definitely in that pre-seed friends and family to pre-seed round that you were talking about, Jonathan. We started the company last year. We launched our platform in July of this year. When we launched it, we were focused a lot on video social proof and using this kind of engine to get video testimonials and those kind of things. And we've signed up some accounts in those areas. But we've seen a lot of interest on the knowledge side, which is where I really reside, and I'm super excited about. Most notably, as I talked about, the International Olympic Committee. So I've taken $200,000 of the funds that the IOC has allocated to me to manage this whole project, interviewing thousands of people on behalf of the IOC to see how they planned and organized the Olympic Games, which is the world's largest, most complex peacetime event, and to share that knowledge with future organizers. I've taken $200,000 of that fund to plow into this. And the reason is because the IOC is now officially going to replace its old legacy platform with something new. We have been invited to participate in this tender process. They are going to be sunsetting their platform in 2023, looking to replace it with something more robust. We're very confident, given our connection and also the capabilities of our platform, we have a very good shot of winning that contract. Just this week, we started today, although we don't have the ink on the paper, but the contract has been drafted to do an $80,000 project for the Salt Lake City, Utah Olympic bid. So we're super excited about this project using RAKONTO in a number of really interesting and innovative ways for the bid, ranging from public engagement to really capturing the story of the bid, working in partnership with the Utah Olympic Legacy Foundation. And then we've got a really interesting project at the top of the screen here with the 2029 Asian Winter Games, which will be held in Saudi Arabia, of all places. So that's very interesting. And they basically reached out to me last week and asked us if we would be interested in participating in a tender process to provide the knowledge and learning platform for the Asian Winter Games. And so we're working on that right now. Super excited about that project and providing a range of services. And you can see most of this is kind of in the sport event space here, which is where I have a lot of my network and connections. But the market is broader than that. Gartner late last year released a study saying that for 2022, there was a forecast of global spend in AI applications approaching $62 billion. And just over 7 billion of that was in the category of knowledge management, which represented a growth of more than 32% from the previous year, last year in 2021. And in fact, this year, knowledge management is set, according to our friends at Gartner, to be the top category for AI spend. And a lot of that has to do because you need AI to take all of this unstructured data, whether it's in old documents or whether it's through conversation or audio or video recording, and turn that into something that can be analyzed and understood and made accessible to people. So that's the category that we're playing in. We see that as a big category moving forward in the future. Our model is a SaaS, and our per user pricing you can see here for 3 different tiers, and we can spend some time talking about those different tiers. But the enterprise market is I think interesting to us because we can do some of these large scale implementations. There's some competition in this space. Most of this competition really centers on video social proof, but the engine for video social proof is similar to the engine that you would use to capture implicit or contextual knowledge. So we've done a pretty good analysis of that competitive market, and we fare well compared to our competitors, particularly with more enterprise-ready solutions like respondent collaboration. So we've built in some pretty robust collaboration capabilities there. Video editing is an area where we're still working on it, but we'll be competing there soon within the next 6 months. You can one-click publish to websites and social media. You can also include other kinds of media like photos and files as well. So it's not just limited to audio or video, and we're very competitive on our pricing. We've done our homework when it comes to the competition. We do see that there, the companies out there, of course, like the big ones like Microsoft with SharePoint and things, content management systems or content delivery services. But we don't think that we compete directly with them because we're more focused on the knowledge harvesting element and not as much on the distribution. We can play nicely with those kind of companies that are in the knowledge of the learning management system space to basically serve them knowledge assets that can be consumed in those platforms. Our focus is really on the capture, so we can make capture very, very simple for people. And where we're at now, we're early days, and so we're doing our first raise, and we were looking at a 500,000 raise with a 5 million post valuation cap, with the majority of that going into scaling up sales and marketing while maintaining our cadence in product development. So that's my presentation, and I thank you for the time, and very happy to answer any questions that anyone might have.
Yeah, great. Thank you so much, Christian. I'm actually gonna, as we're coming to the end of our time here, I'm just gonna remind everybody to send your questions to me directly. I'll be following everybody up with the recording. And if you have a question, just respond there with it, and we'll get you guys connected. Anybody with any interest as well. As I said before, if you're watching this as the recording, please reach out if you have any questions or interest as well. I want to thank everybody for attending today. You were a great audience, asked some great questions. John, I want to thank you for your presentation. It was awesome, and we loved having you. And Mike as well, great presentation. And I want to thank everybody, and look out for next steps. We'll close it out now.
Thank you, everyone.